Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, July 2nd, 2025. We're about 6:05 p.m. Central Time. Now, before I get too far with you, I am holding my 4th of July sale. It's 40% off any of the courses that I have. With the courses come the research that we have in many cases, so you get to see a couple of weeks of that with our outside day and our Bollinger Band course, and a month of it with our charting course. Normally that charting course is $600. It comes with software and everything you need to follow it, and you learn my technique. It's pretty simple, but really interesting course. And of course, any of my research. So let's assume you're a futures guy. For $8 a month now. This is as low as you're going to get it. $8 a month for a year. Your basic, it's less than that, as you can see, and there's no tip like at Starbucks. For $8 roughly, you're going to get 22 videos, all my special reports, and the other goodies I throw in. Shortly, I will start doing one of these times my webinars again. Haven't done them, haven't wanted to do them for a while, but I'm trying to make some time for it. So we'll see where we can go. I just haven't had it yet. All right. So what else we're going to get? What about news? This is the big granddaddy report tomorrow. The non-farm payrolls. You know, the market looked today at the ADP report and it got all excited. Oh my gosh, people aren't hiring from ADP. ADP is not your benchmark. The benchmark is the non-farm payroll data. Let's see if it's weak. Something's not making sense. JOLT's report yesterday showed, nearly a 400,000 increase in jobs, 350, 400,000 more, and yet ADP is saying that people aren't being hired. What part of this is real? What we can see, and this is the trend, the upside numbers are getting smaller. And that's what's got the stock market and traders excited, because they're saying that the growth isn't there like it had been, and eventually the Fed's going to have to get ahead of the curve so the number doesn't fall into a big negative territory. Keep your eyes barking today. I was watching an interview with him, I think he's the St. Louis Fed president, and he was talking, he will be watching the unemployment number, but even he said, you seem to be caught between 4.1, 4.3, and you're just going back and forth in there. The May trade balance data should come out. They're looking for an increase from last week's, I'm going by memory, 61 billion to about 71 billion. The S&P Global Group will come out with their final June service sector PMI at 845. The ISM will come out with their June service sector index. So we'll get one number, but we'll see if it's doing better or worse. Factory orders for May, not June, for May will come out at 9, and we'll get natural gas storage, and they're looking for about 50 billion cubic feet to be put in. So we'll see where that all carries us. As for the markets, you know, as I mentioned, if you were a subscriber, I explained today the golden cross that took place in the S&P. Market's still doing well. Notice all of the indices are temporarily, at least, into the green tonight. They will rock and roll according to that report tomorrow morning when they get the jobs. In the metal markets, the metals, I think, are looking at the market and understanding that anything that gets passed by the tax spending bill is going to be inflationary, because there aren't many cuts coming in. Now, so far, there's holdouts in the Republicans. They don't have enough votes yet to get the procedural vote passed, and they have to do that to get to a full vote. Because of the terrible weather that hit the East Coast, my understanding is many of the House representatives are driving in. They can't even fly in, so they'll get there so that they can vote on it. I'm sure everybody's aggravated that here they are for the 4th of July, and they're going to be in Washington, not with friends, family, and barbecues. Dollar down a little. Currencies are going to wish-wash. Now, the British pound had a bad piece of news today. Is Miss Reeves going to be with Mr. Starmer, the Prime Minister? When asked in Parliament if she'll be there on the ticket, he didn't give his vote of confidence. From what the press is saying, they saw her cry. And I don't know what that is. She seems to be good at her job. And if she's gone, it's because she's too hardcore trying to keep things in. If they get rid of her, they're going to get somebody that goes into free spending. Remember, at the end of the day, there's a lot of welfare that goes on in the UK. On the energy markets, just keep in the back of your mind, what are we going to get? We're going to get, and it's very important to remember this, OPEC on Sunday. So that's where you're at. And most of the grains had a good rally today. I took a lot of short covering. I'm not convinced yet it's a chart change of a trend developing, but we'll see. You never know where that's going to come from. So let's take a look at our first chart. When we take a look at the E-mini weekly, if you closed right here, you're an all-time high weekly close. And that's important. Remember, you will be open on Friday. On the S&P, this September, are we going to get through the contract high of 62.88? You certainly have come up there. Sometimes you get to these numbers and you then wobble a little bit. Wouldn't surprise me. You have a pattern of higher lows, higher highs, which is bullish. I am not showing the 50-day average here. I show that in my morning subscriber video. I don't need too many lines here, and you can pay $8 a month to see all the things that I show you in the morning with the trade ideas. But suffice to say, this market has been over all the key averages. You had one recent break in mid-June. It got as low as the 200-day, and since then it has soared one more time. It is what we call the gorilla glue trade, where almost every day you're hitting the upper Bollinger Band. You haven't begun the rollover to the right-hand side yet. We'll see if that develops. And you have an embedded reading. I mean, everything's bullish. And the market doesn't recently, since the 15th at least, right in that zone, you haven't had much of a break in the market. When we come to the NASDAQ, you've gotten through the contract high. I'm going to be able to take that off now, and now that you're through it, and I won't have that extra line. Suffice to say, I am still very much in the bull camp here. Notice what's leading the markets again. It's the tech companies, and that's important. The Dow latched on with the gorilla glue. It's when every day you hit the Bollinger Band, it forces the markets to embed. Over time. It doesn't happen on the first day. It takes a little bit. And when it does it, until the red line, which is now at 94, closes under 79, the breaks have a tendency to get bought. Now, I think the smart money will probably want to see tomorrow's jobs report before they do anything. And remember what I told you yesterday. I'm going to repeat it. This, technically speaking, is still not the strongest of the markets. It doesn't have an embedded reading. However, it is where the bargain hunters are. This is where people are saying, you know, all these other markets have roared, they left behind. If there's nothing left, why not go fishing in the index here, see what chart looks okay? Can you buy that to play the catch-up game? That's what I think is going on, and that's why you've gotten to the 200-day average again. You haven't done that for months on end. You have to go all the way back to the beginning of the year. So you've finally done that. This is not a market. I want you to understand that I any longer am saying, oh, I want you to be short in that market. Not saying that in any manner. Haven't said it in a long time. What I've said is if we get sell signals, that's the one I'd want. I'm not even in that camp anymore. In the DAX, you've got higher lows, higher highs, overbought. Don't know if you'll be able to get to that band or not. Things look okay, though, at this time. If you were to take out Tuesday's lows, then you should get nervous because the pattern would be one of breaking down a little bit. In the T-bonds, in the notes, why get involved? You have no say in how this is all going to play out, and the charts mean nothing to me going into this jobs report. Jobs report will move it. As a pure technician, no, I wouldn't want to be long. You lost the bullish embedded reading. If we come over now back here to the 30-year, same thing. And they're at a key moving average right there. This could get down maybe to 108.12, but I wouldn't play for it in front of a jobs report. The dollar index is the gorilla glue trade to the downside, and the euro, not the gorilla glue trade anymore. It broke away from that, and now it's paused. That's the best word I can give you. It wants to see what should it do about the U.S. jobs. Is it going to be bullish, bearish for it? Are people going to think that, oh, the Fed's going to move into the market with interest rate cuts? Or not yet. This is still not weak enough. It'll react accordingly. I don't want to be the hero trying to predict that. The British pound, as I told you today, when Mr. Starmer, Prime Minister Starmer, did not support Ms. Reeves, kaboom, this market fell apart. You should have seen what went on in the gilts. They shot up 1/4 point because the market realizes they need a stabilizing force. And if she's not there, they're going to put somebody in that, yes, sir, I'll do that. Let's just spend more money. She's a stabilizing force, and the market realized it. They punished the pound. They need her at this point, in my opinion. Lower low, higher high, overbought in Bitcoin. I think you're just going to spin wheels there. So you're no longer in the bear trend in Brent, but you're not in a bull trend. You've gone to neutral. Are you going to embed this reading becomes the big story. So far, no. So I think the market has now washed itself out. I think the smart shorts have probably backed away. And they're waiting now to see what does OPEC say and what do they do. Now, to give you an example, we've been increasing about 400,000 barrels a month for several months in a row. I think it began in April. Be careful. They say they can produce the 400,000. They give the right to do it. You haven't seen Russia do it or Iraq. They were overproducing. They promised OPEC they'd get back in line, so that means they aren't. You did about 150,000 barrels in that increased production number in June. Not the 400,000 plus. That's important. You can see what's going on here. You're no longer in your bear mode. The market held the 100-day average, and now the resistance is the 200-day and the 18. It's not the place to be temporarily. That's about all I can say. Gasoline, as I told you, the gas stations have bought. The prices aren't going to go radical by Friday. So the president's got his gift. He's going to be able to say, look at your gas pumps. You talk inflation? It isn't there. What inflation are you talking about? That Fed chair doesn't know what he's doing. I happen to like Fed Chair Powell a lot, but you know what the president's going to say. In natural gas, lower highs, lower lows, market's sort of stable. But there's nothing bullish here other than the market's oversold. So I don't see anything. You got a crossover that just happened where the 18-day average just got underneath the 200. That's another bear setup in the market. So I am still very much in the bear camp. What I'm not in the bear camp about, in the bullish camp about, is the sale. Take advantage of our 4th of July sale. IraEpstein.com, either courses or research. Pretty simple. There's an icon up here to take you there. I'm Ira. You take care.